So thank you all for joining. And I'd just like to start with Fred. Have a question about how the present financial situation has evolved. If you look at the last downturn, and there was a reference to this that with Barry Sterlick talking about the RTC rather than the FDIC. If you look at the last downturn, the RTC was a relatively efficient way for bad loans to move from banks to investors, whether they were financial players or developers. What do you see happening this time?
Well, as Bob mentioned earlier, we started seeing the weakness in the housing market, after Katrina in 2005. So it's been, we're really entering the 5th year now of a housing downturn. And I think that the bank's disgorging of distressed assets that we would have expected to have occurred a long time ago really hasn't happened. There's not really a roadmap for them. You have a lot of banks that probably are insolvent, that if they really had to disgorge would be, the 500 bank number that was tossed out was probably maybe a soft number. In terms of the capital markets, last year at this conference, we were looking at the demise of the American financial system. Basically, we were surprised, but by April of 2009, Toll Brothers became the first of the big public home builders to actually tap the debt markets. We issued $400 million of senior debt at about 9%. And then 5 months later, we were able to go back to the markets and issue another $250 million, this time below 7%. First deal was 8.5 years. This is 10 years. So from the public capital markets, they've opened up a lot. The banks are still pretty clogged up, I would say, in terms of providing new money to the industry. Credit facilities, those builders that have had to go back to the banks for revising their credit facilities have found them getting chopped 30-40%. Prices are going up, and there doesn't seem to be a particular motivation or intensity among the banks to really want to provide capital, as opposed to sort of the public markets, which I think are responded more quickly.
Al, what do you think?
And then based on what Don said, are you revamping your whole strategy?
We are, no. We're still, we're bidding on properties where we're being a little more conservative than some others. And, I think what Don said when he said IRRs are out the door, I think you need discipline in the market. I think Dubai, for example, is an example of sort of that vision that may not necessarily have been disciplined by some of those analyses. And I think over the long term, Dubai, has some fundamentals that will have a resurgence. But I think you still need to have discipline, because especially in real estate, you can be very visionary, but at some point the music stops, and if there's not the base of users for your properties, everybody loses.
Right. I mean, one thing that struck me this morning when people were talking about the number of times the REITs have gone to the market and raised money is show me of the money an issue at all right now? Is there a kind of duality in the market where on the one hand it's tough to refinance, on the other hand it is possible for companies to go into IPOs?
Look, there is money. The problem is applying today's new money to existing situations. That's really the bottom line right now. So sorry I missed this early morning panel, so if I repeated some of the comments that came in earlier. This year globally, there's been about $78 billion of equity raised, roughly in that number, by global property companies. $32 billion in the United States. There's been about $12 billion of unsecured bonds that have been effectively raised this year by public REITs. And that really only is from a standing start, really in April to now. So if you sort of think about that and annualize that, there's a tremendous amount of capital out there. The problem is there's been very few acquisitions. Simon Property, I'm sure you all saw, announced the acquisition of Prime Retail Outlet Center company. That was a company Prime could have easily gone public. It's a very capable, very good business. That was clearly an option for them, although they chose to, in effect, sell the company. So the problem is actually there's really no issue getting capital. It's very fluid. There's lots of investors that want to deploy more capital into companies like Barry's, like David Simon's, all over the world.
But that brings up a good point. I'm not so sure that there's no issue getting capital. There's no issue with the big guys getting capital. And the question is, even with the bank bailouts? Have we bailed out the big banks at the expense of all other banks, and in so doing, have we missed an opportunity? Because what I've seen, and I think it's great that we finally have a banker on the panel. So but
I mean, Al, like here's a good example. Like there were 2 IPOs priced this week. If you sort of just step back and said, okay, proven CEO is going to go out and start a new company. He sort of left his old company, has a great track record. He has no office space. He has no office equipment. All he does is he's got a group of maybe 5 or 6 other people that are quote willing to start a company. Well, he raised $400 million this week to basically go out and set up a company, go buy hotel properties.
But in fairness, I'd say that's more the exception.
It's more the exception than the rule.
I mean,
but I'm just saying that the money is out there for it. But I think the point you're raising is it's sort of a small minority of people that will actually get the capital, and there's obviously a big issue out there in terms of.
Yeah, I would say that there's sort of a tale of two cities in our industry. You've got the big builders. I think by now many would have thought, given the length of and severity of this downturn, that more public home building companies would have busted, and really very few have, for various reasons. We were able to get a net operating loss extension, which brought a lot of cash to builders. I mean,
how did you do that? Let me give you my card.
But the smaller builders who were more dependent on regional banks are crumbling. And we're in the Philadelphia market. There's probably 8 or 9 of the builders, the small private guys that we compete with, because the big guys don't really go into the luxury market, that just are out of business right now, and that's most of our competition. And they just can't get capital, and they're really hurting.
I agree with Al. I think that the availability of capital is the exception, not the norm.